So guys, we are going to discuss study unit 9, which is called cost allocation techniques. So we have three main topics in this chapter. One is called joint product and byproduct costing. This is our topic for today. Then we have here topic number 2, which is relevant to overhead allocation and normal costing. And topic number 3, we have allocating service department cost. So this topic we have already covered with the job order costing. Okay, don't worry if you want to know this, recordings will be available. Okay, so discussing what? Joint product and byproduct costing. So here we go. So let me start with the help of example and then we'll come back what definitions are written. So very common example to understand joint product and byproduct costing is oil and gas business. For example, if you are oil and gas company and your business is what? You are extracting the crude oil and this crude oil you are putting into the refinery process. After refining process, so you are able to divide this crude oil, or you are able to manufacture further products from the crude oil. For example, maybe you are getting what? Petrol from the crude oil. Maybe you are getting diesel from the crude oil. Maybe you are getting kerosene from the crude oil, gasoline, asphalt, different products you are getting. Understood? Now please remember, from this point, from the scratch till this point where each product is separately identifiable, whatever cost you will incur from the start till this point is called split off point. What it is called? Split off point. What is split off point? How you will define? Like it is a point where different products can be recognized. Like this is petrol, this is diesel. That point is called what? Split off point. Any cost which you will incur from the start till the split off point, so that is called joint cost. What it is called? Joint cost. It is also called common cost. It is also called processing cost. And mainly the joint cost, common cost, or processing cost will include three costs. Mainly, it might include the cost of material, it might include the cost of labor, and it might include the cost of overheads. Material, like for example, crude oil. Maybe you're buying from somewhere crude oil, it's a cost of material. So whatever cost you will incur to bring the crude oil to the refinery process, that will also be the part of material cost, because you will incur transportation in cost. Understood? Then you will incur maybe some labor cost, then maybe you will incur some overhead cost, other expenses. Understood? So these are called what? Joint cost, common cost, or processing cost. Then this crude oil itself is a product which can be turned, which can be converted into number of subproducts. So this crude oil is called what? Joint product. Understood? For example, what other example comes in your mind for joint product? Like wood. Wood could be a joint product. From there you can make number of different products. Understood? Now continuing with the next. For example, this petrol. The petrol which you got at the split off point. Maybe you want to process further. What I'm using word? Process further. Okay, obviously, there are different types of petrols are available. Right? Maybe special, high octane, low octane, different types are there. So maybe if you will process this petrol further, so you will also incur further cost. Understood? For example, you are converting into high octane and low octane. petrol. So whatever the cost you will incur here to process further, these are called separable cost. What it is called? Separable cost. These are called separable costs. Now, actually, what is the topic here? So here, if you look at here, I told you 3 to 4 different definitions. First definition, I told you about which point? Splitter point. Then I told you definition about what? Joint cost, common cost. Then I told you examples of joint cost or common cost. Then I told you what? What is the separable cost? Separable cost is also called further processing cost. Now, what is this topic? And then I will show you, because you also need to memorize the wording of the topic in order to solve the question. Actually, what this topic is, we are going to allocate this processing cost to these products. Understood why we need to allocate? The reason is that these costs we have incurred to get the petrol and diesel. So these costs should be charged to the petrol. Understood? Because maybe you want to recognize the inventory of petrol, or maybe you want to recognize the inventory of diesel in your balance sheet. So you must know what is the cost. So this is the first question I told you. Sometimes they will ask you the question, what is the purpose of allocation of joint cost? So you would say the purpose of allocation of joint cost to get the value of inventory for financial reporting purpose. Second purpose could be there obviously to set the sale price also. But the primary purpose is to get the cost of inventory. Because if you know the cost of inventory, you can also calculate the price of the product by adding some profit into that. Understood? Now guys, we have a different method to allocate the product cost. So we use guys two methods, overall two methods to allocate the joint cost, right? So what I told you, we are going to allocate the joint cost to the products, and there are mainly two methods are there, mainly two categories are there, but then we'll study subcategories. The first one is called what? Physical measure-based approach. Physical measure-based approach. Right? And in physical measure-based approach, what we will use, what we will do, we will use some quantity, like it could be kilograms, liters, barrels, ton, to allocate the common cost to the product. And then we have a second approach, which is called market value based approach. Market value based approaches. And under market value based approaches, we have three categories. We will use sale price at split off method. At which method? Split off method. Like for example, if you will sell the product at split off point, what sale value you will get? Based on that, we will allocate. Then we have what? We have net realizable value method, NRV method, net realizable value method. That I'll tell you what it is. And third approach, we have what? Gross profit, gross margin or gross profit method. So these are three methods. I'll explain, don't worry. So now let's move back because we are going to discuss these four methods in total. And then we will do practice question, how the question will be tested. So coming back to the guys, now the book, what your book says, what your note says. So here we have a different definition. If you remember, you can go through this definition. I told you what is the joint cost or common cost. And what I told you, these are those costs which incurred before the split-off point, like from the start till the split-off point. And I told you these costs will include what? Direct material, direct labor, and manufacturing overhead. Understood? Then I told you second definition about what? Separable cost. What I told you, separable cost are those costs incurred beyond the split-off point. Like as I told you, these are also called further processing costs, like where we converted the petrol to the high octane or low octane. So those costs are called what? Separable cost. Then we have a definition of byproduct. This I didn't explain. I'll explain with the topic. Understood? So now, guys, we have here. Then I told you we have a primary purpose. What we have? Primary purpose for allocating the common cost. What is the primary purpose? Because we want to determine what we want to determine the inventory cost for financial reporting purpose. This is the primary purpose of joint costing. Then I told you like we have different methods to allocate the joint cost. What methods we have, guys? First method is called what? Physical Meyer based approach. Physical Meyer based approach. And then we have what? Market based approaches. Under market based approaches, we have a further 3 subtopics. We have sale value at split off method. We have estimated net realizable value method. And we have constant gross margin percentage and revenue. This is third method under sale value. That we'll see how it is going to work. So I'm going to start with first approach, which is called what? Physical Meyer based approach. And I need your concentration. It is not hard. So first, let's understand what approaches are there, and then I'll go through the questions. So first approach we are going to discuss. That is called what? Physical Meyer based approach. Need concentration now, guys. How this approach is going to work? Let me show you first simple example. Just simple example, then I'll be back here. What is written here? For example, guys, our total common cost means to say joint cost, which might include cost of material, labor, and overhead. For example, our joint cost is $1,000, assume. And we are manufacturing 2 products. So we'll write always first name of the product. For example, product A, product B. In exam, this product will be given. Then what we will do, we will write the quantity of the product. This will also be given in the question. For example, we are producing 200 units of product A, and we are producing, for example, 300 units of the product B. So total units, how much we are producing? 500. This is the only information which we need to allocate the common cost. Now we can allocate the common cost. How we will allocate? If I want to allocate the common cost, I will apply this formula. For example, I'll take the quantity of the product divided by total quantity, and I'll multiply with what? With the common cost. If I will apply this formula, I'll get what? I will get allocated common cost for the product. For example, if I want to allocate to the product A, how many units of product A we have? 200, will take 200 divided by total quantity. Total quantity is how much? 500. So this will give you percentage like maybe 40%. Okay. Then we will multiply with what? With the common cost. So you will get allocated common cost how much? 400, because common cost was how much? $1,000. Understood? If I want to allocate to the product B, what I will do, I will take the B quantity as a numerator, which is 300, divided by what? Total quantity, which is how much? 500, and multiply by common cost, which is 1000. I will get what? 600 allocated common cost. What was total common cost? 1000. It means 400 we will take it to the cost of inventory of product A, and 600 we will take it to the cost of inventory of product B. This is called which method? Physical Meyer method. In physical Meyer method, you will be given with the quantity of each product. Quantity could be given in kilograms, in barrels, liters, ton, anything, output, units. Understood? So this is how you will deal with which method? With the physical Meyer approach. It means for physical Meyer approach, common cost will be given in the question. products will be given and quantity will be given. And after that, you have to start from here. If you're taking note, guys, you can take a note for this. Then we'll move to the next part. Now, guys, there are some, this is actually the formula which we are using to allocate the common cost based on physical measure approach. What is the formula? For example, if you want to allocate to the product A, we'll take what units of product A divided by what? Total units and multiply by common cost. This formula you are applying, okay, just to get the allocated common cost. Now here we have some advantages or disadvantages of this method. Also remember, please, I need your concentration. First advantage is what? Because I'll share this sheet within group, you can download from there. First advantage is what? Ease of use. This method is easy to apply. Understood? Second advantage is what? Having objective criteria for the allocation of joint cost. Objective criteria means we are using like a solid thing. Solid mean to say units, kilograms, or quantity we are using to allocate the common cost. Now, what is the problem with this formula? So what is the problem? Problem starts from here. What's written here, I'll explain. First, let me go through with you. It's written, this method treats low value product that are large in size. For example, you are making chocolates, assuming. Okay, chocolate is what? Low value because its value is less. But assume if its quantity is more, but value is less, quantity is more, what will happen? You are not allocating based on value, you are allocating based on quantity. Value is low, but if quantity is high, automatically chocolates will absorb bigger portion of the joint cost. Right or wrong? So what will happen is what it's written here, the low value product that are large in size. Size would say in quantity. Those products which are low in value but large in quantity, what will happen? So because we are allocating bigger portion based on quantity to that, so as it will be like that as these products are very valuable, but actually these are not valuable. So what will happen as a result? A large low value product. The value is low but quantity is large. Okay, this product might always show a loss because its value is less, but you are allocating bigger portion of the cost. Obviously, you cannot sell at higher value. You have to sell at lower value, but you have allocated bigger portion of the cost. So ultimately, this product will be in loss. Understood? So, and vice versa. You can also reverse in the other scenario. If you have a high value product, which is small in quantity, they will absorb less cost and it will show more profit. Understood? So this is the drawback with this technique. So now, guys, we have a second approach I'm going to tell you. Then we'll go through the question. Don't worry. Just first follow with me what I'm doing. So now we are going to discuss second method. Second category is called what? Market-based approaches. Under market-based approaches, I told you three methods we have. The first method under 2.1, the first method under market-based approaches is called what? Sale value at split of method. What it means? Sale value at split of method. It is also called gross market value method. Please remember, sometime in exam question, he will ask you to apply gross market value method. It means you have to apply sale value at split of method. What it means? It means what if we will sell the product at split of point where the product was recognized separately. If you will sell at that point, and what is the sale price you will get at that point? If I will use that sale price to allocate the common cost, what will be the share of common cost allocated to each product? Understood? How it is going to work? Let me show you with the help of example first. Easy. Again, I'm assuming, for example, for the sake of example, I'm assuming. For example, we have a common cost. Let's assume it is Now $10,000, assume. This will be given in the question. And we are manufacturing two products. So first we'll write the name of products. For example, you have two products, product A and product B. This will also be given in the question. Then what we will write? We will write quantity or units of each product, which will be given in the question. You are not required to assume anything. For example, we are selling 200 units of product A we are producing. Please remember, this quantity should be quantity produced, not sold. Understood? Sometimes to confuse you, in question he will tell you two types of quantity. Quantity produced and quantity sold. Make sure you should use your quantity produced, not sold. Produced. Okay, for example, we are producing 300 units of the product B. Then what we will do, this quantity we will multiply with sale value at which point? At split off point. This will be given in the question also. For example, each unit we can sell here $3. Here we can sell, for example, for $1. Assume each unit of product A can be sold for how many dollars? 3. And each unit of product B can be sold for $1. So what this will give you? Sale value at split off point. Understood? So we'll take what? 200 times 3, it will give you what? $600. And 300 times 1, it will give you what? $300. So we will make the total of this now. Total is how much? $900. Because what method we are using? Sale value at split off. It means now we will calculate the fraction on this sale value. Understood? And how you will get the fraction now? I will take sale value of each product divided by total sale value and multiply by common cost. This will give you what? Allocated common cost. For example, for product A, what is sale value? 600 divided by total value is how much? 900 and multiply by common cost is how much? 10,000. This will give you allocated common cost. How much it is? 6,000 6,600 and 67 rounded value, right? Then if you want to allocate to the product B, what I'll do? I'll take B value, which is how much? 300 divided by 900 multiplied by common cost, which is 10,000. So this will give you 3,333 rounded values. Understood? It means if I'm asking you the question now, how much share of the common cost will go to the product A? Obviously, if it is 10,000 was total, so we'll take to the product A cost of inventory. Cost of inventory, how much we will take? 6,667. And for the product B, we'll take to the cost of inventory. How much value? 3,333. Understood? This is how which method will work? Sale value method. Can you tell me what is the alternative name for sale value method? It's called gross market value method. Don't forget, because they will ask you, they will use different name. Gross market value method. It means you have to apply sale value at split off method. Now please take a note of this, guys. Actually, now what we have done here, guys, we have applied this formula to allocate the common cost. What we have taken sale value of each product, but at split off point divided by total sale value multiplied by common cost. Understood? Great. Now going to the next second method under market value or market based approaches. Second method is what it's called? It's called what? Estimated net realizable value method. Net realizable value method, and it's also called NRV, net realizable value. So let me quote example here. Please guys remember here, the estimated NRV method also allocated joint cost based on what? Based on market values of the product, but not only gross market values. We need net values. So it means we need net realizable value. So how you will calculate net realizable value? I make format, don't you worry, format you will get. But first understand what is the net realizable value. So for example, guys, I'm just giving you example to understand only. For example, you want to sell a car and you have to travel all the way to Abu Dhabi. Okay, and if you will sell car there, so you will get $200 as a sale value. Understood? So from this sale value, we will deduct which cost? Incidental cost. Now it's not an accidental cost, it's incidental cost. What is incidental cost? By definition, incidental cost means to say these are those costs which are necessary or which we will incur to the product, to sell the product, but to make the product saleable. Understood? Any cost which we will incur or which is necessary to incur to make the product in saleable condition. So that is called what? Incidental cost. Please remember, I'm just giving you a rough idea. If you will sell a car in Abu Dhabi, you will get $200 as a sale value and you incurred $50. Some incidental cost, maybe it could be a cost of marketing or advertisement or maybe some transportation cost. Understood? Maybe you paid some commission if you sell the car through the agent. So these are incidental costs. So you sold for 200, you paid cost how much? $50. Tell me what is your net proceeds you got after paying incidental cost? You got what? 150. This is called what? NRV. Same in joint cost allocation. So maybe when you are selling the product, you will get a sale value, right? He will tell you, obviously you will get sale. Then you have to deduct their incidental cost, which might be given in the question with the following name. Incidental cost could be given with the name of cost of completion. Maybe your product is not yet completed. To make it saleable, you have to complete first. You will incur the cost. Incidental cost could be given with the name of cost of rework. It could be given with the name of some processing or separable cost, or it could be given with the name of any other selling cost like marketing, commission, etc. Understood? So this is called NRV. Now it means we need NRV. Based on NRV, we will allocate the common cost. Now how you will apply the formula, then I'll show you format, don't worry. You will apply the formula like that. You will take NRV of each product and then you will divide with the total NRV and we will multiply with the common cost to get the allocated common cost. Understood? Now what is the format? This is the format is on your screen now. I'll show you. For example, again, I'm assuming now we are manufacturing 3 products. And I'm assuming our common cost is $10,000. Is the common cost which will be given in the question. So what we'll do, we'll take first product. We'll write the product name. For example, we have a 3 product. Product A, B, and C will write. And then we'll write the quantity of the product, which will be given in the question. You are not supposed to assume anything. It will be given. For example, for product A, how many units we have? 100. For product B, we have 200 units. And for product C, we have 300 units. And then we will multiply this quantity with what? With the sale price of each product. He will tell you. For example, product A can be sold for $1 per unit. Product B can be sold for $2 per unit. Product C can be sold for $5 per unit. It will also be given selling price. So now you will multiply quantity with the sale price. So this will give you what? Sale value of each product. Do you remember formula for NRV? NRV formula was what? Sales value, which we got it, minus what? Incidental cost. So sale value, we got it for each product. Now we need to deduct what? We'll deduct now. What we will deduct? Incidental cost. Incidental cost will be given in the question. For example, for product A, he told you it is $20. For product B, it is $60 in total. And for product C, it is $50. Understood? So what we'll do, we'll deduct from the sale value now. For example, for product A, what was the sale value? 100 minus what? 20. You got NRV of how much? 80. For product B, sale value was 400. Incidental cost are 60. You got a 340 as an NRV. For product C, we have 1,500 was the sale value. Incidental cost are 50 in total for product C. So you will get what? NRV how much? 1450. And now just you will make the total of NRV which will be 1870. You can check arithmetical accuracy. Yeah? Maybe arithmetical there could be a problem, but this is the process you will follow. Now guys, now I want to allocate to the product A. What I'll do? I'll take NRV of the product A which was 80. I'll divide with the total NRV which was how much? 1870, and I'll multiply with the common cost which was 10,000. So this will give you allocated common cost. It means out of 10,000, which was our common cost, we will allocate $428 to the product A, to the cost of inventory of the product. If I want to do calculation for product B, I'll take NRV of product B, which is 340, divided by total NRV, which is 1870, and multiply by common cost. So you will get cost to be allocated to which product? Product B. If we want to do for the product C, guys, I'll take NRV product C, which is 1840, divided by total NRV, which is 1870, multiply by common cost. You will get allocated share of the common cost for product C. Understood? Clear? This is the breakup of what? Common cost, which will be allocated to the cost of inventory of the product A, B, and C. Understood? It means here you are calculating or you are allocating common cost based on NRV. Just remember the formula. NRV is always equal to sale value minus incidental cost. Understood? And this is how you will do it. So I will request you, please take a note of this, then we'll move forward. Quickly write down this format, guys, because it is good if you will write it. Now, guys, we are going to talk about last approach from cost allocation. This approach is little bit, you will feel it is tough, but it's not tough. Once you will read theory, it is tough. But once you do the questions, it will be easy.
My takeaway from our day.
So third approach, that is called what? Constant gross margin percentage NRV method. Someday we'll tell you gross margin. Apply gross margin percentage method. Understood? So here we have to do three steps calculation. Please, it is just little bit reverse calculations. So step number one, if you will go through what's written here, so 3 steps. By just reading theory, you will not understand unless I'll do the calculation with you. But just read it first. Step number one. Step number one is what? Determine the overall GP percentage. GP stands for gross profit percentage. We will calculate here first step. What is the total percentage of gross profit for all product? Then step number two, what's written here? It's written subtract the appropriate gross margin from final sale value. Normally what we do, we have sales less what? Cost of goods sold is equal to what? Profit. Gross profit, right? Is equal to gross profit. But if I know sales value and I know gross profit values, I can reach to what? Cost of goods sold. A total cost. Understood? So this is what they're saying. In second step, what I'll do, I'll take sales less gross profit. So I will reach to what? I'll reach to the total cost value. Total cost means the cost of goods sold, I assume. Then what we'll do? From the total cost, for example, this total cost or cost of goods sold will include 2 costs. It will include what? Joint cost also. And it will include which cost? Separable cost. You remember separable cost I told you, which you will incur after processing further. Right or wrong, at the time of processing further. But assume, for example, if I know the total cost, if from total cost, if I will deduct which cost? Separable cost, automatically I will reach to which cost? The joint cost. Actually, this is what I'm going to do. First, I will calculate gross profit percentage. Then I will deduct from sale the amount of gross profit. I'll get total cost. And then from the total cost, I'll deduct separable cost. I'll get what? Joint cost. This is what I want to calculate actually. Joint cost you will automatically get. But how these three theoretical concepts can be applied in calculation. So here we go. So step number 1, guys, need concentration. This is step number 1 is written. First of all, what we will do, we will calculate this step 1. I'm going first. What was step number 1? We have to calculate what? Overall gross profit percentage. How you will do it? First, write the GP formula, GP ratio formula. GP ratio is what? Numerator is what? We need total gross profit for all product, not for one product, for all product. Divided by total sale value of all product. The numerator is what? Total gross profit. Denominator is what? Total sale value. And then we'll multiply with the 100 to get the answer into percentage. But how? Let's have a look. Guys, first we have to calculate. I have given the name A to the total gross profit and given the name the B to the total sales value. So first we will calculate B value. What is B? The denominator of this formula. What is denominator? Total sales value. How you will calculate? Easy. You will write always first name of the product. For example, you have a product A and B. This will be given in the question. Don't worry, product name. Then you will write here what? Quantity of the product. It will also be given. For example, we have a 100 kg for product A, 200 kg for product B. Then we'll multiply with what? Sale price. It will also be given in the question. For example, for product A, sale price is $5. For product B, sale price is $6. We will multiply. 100 times 5, it is 500. 200 times 6, it is 1200. And we'll make the total. Total is how much? 1700. This is what I want as a denominator. What I want? Total sale value of all product, which is how much? 1700. So we got the denominator of the formula. Understood? Now what? Now I want numerator. What is numerator? Total gross profit. Gross profit, how I will calculate? Don't worry. So gross profit A I am going to calculate. I'll take what? Total sales value, which is how much? 1700. From there, I'll deduct which cost? Total cost. Here, make sure, guys, total cost should include these two costs, common and separate. Maybe in exam question, common cost will be given straight away, for example, 900. But for separable cost, we might give you individually for each product. For example, we told you separable cost for product A is $10. For product B is how much? $90. I'll make total of both. Total I'm assuming for how much? 100 of separable cost. So now we have a common plus separable. It will give you what? Total cost. If I'll take total sale value minus what? Total cost. What I will get? I will get gross profit of 700, which I'm assuming here as a numerator. So gross profit is 700. Total sale value is how much? 1700 multiplied by 100. You will get what? 41 point something, actually this percentage. It's rounded values here. Understood? So this is what is overall percentage. You got it. Clear? Write down this step first quickly. So we assumed what? This is the separable cost. This was which cost? Separable cost of product A and B. But here we deducted total. This 100. Okay, now we are moving to the step 2. Also, don't forget, guys, because in step 2, we will deduct. We will take sales value of each product. We will deduct from there what? Gross profit. And you know, gross profit percentage, GP percentage, you will always multiply with the sales value to get the GP amount. Understood? GP percentage we will always multiply with the sale value to get the amount of gross profit. So this will give you what? This will give you total cost. This equation I'm going to follow. So please note how you will do it now. We will write step number 2 to calculate what? Total cost. We'll write again name of the product first. We have two product A and B. We'll write A and B. And we'll write the sales value now. Individual sale value 500 and 1200. From the sales value, we will deduct what? We will deduct gross profit. And gross profit, because it is in the percentage, you need amount now. And those percentages you will always apply with the sale. So how I will get GP? I will take always value of the sale of the product and multiply by GP percentage. For example, for product A, what is sale value? 500 and GP percentage is 41% rounded value I'm taking. So it will give you how much? 205 as amount of GP. For product B, what is sale value? 1200 multiplied by GP percentage 41%. It will give you amount of GP 492. Check the mathematical accuracy. Understood? So now if I will take sale value minus what? Gross profit, you will get what? Total cost. This is step number 2. You got the total cost? Now step number 3. From this total cost, again I'm writing the product A. From this total cost always include what? Common plus separable. If from total cost, if I will deduct what? Separable, what I will get? Common cost is what I'm going to do. So that is why it's written here. Again, name a product, step 3. Product A, B. You will write here total cost which you got from step 2. And then you will deduct here what? Less separable cost. And I assume separable cost for product A is 10. For product B is 90. I will deduct. I will get what? Common cost. Understood? Actually, if you look at it, our common cost, I assumed in the question how much? 900. But it is what? Here, if you will make the total 285 and 618, it is what? 903. It's actually the difference $3 because we rounded 41% GP percentage. If you would use the exact percentage of GP, you will get exact here 900. Understood? Or if you want to make it short, so simply you know the step 2. From this total cost, just deduct which cost? Separable cost. In this format, you will get what? Common cost. For example, separable cost was 10. Separable cost was 90. So it will be 285. It will be 618. Understood? So here you can also finish the question. Actually, this is what is the common cost, and make sure this should be equal to the total common cost. Understood? I hope so it is clear. Please take a note of this, and then we will study something about byproduct costing, and then we'll do the practice question for you. Take a note of this, guys. Now we have here a small topic, which is called what? Byproduct. Because this topic will be mingled most of the time with the allocation of joint cost. So first, let's quickly go through what is byproduct, and then I'll tell you how this will be mingled and mixed with the joint cost allocation. So what is the definition of byproduct, guys? If you will look at it, so byproduct are one or more products of relatively small total value that are produced simultaneously from a common manufacturing process with products of greater value and quantity. I'll give you example. For example, guys, wood. You are, let's assume, furniture related manufacturing business. So you are manufacturing furniture items. So you are using wood, right or wrong, to manufacture the furniture, to make the chairs or table. Obviously, while you are manufacturing table or chairs, so most of the time we cut the wood, and you might get 2 to 3 different things from the wood. You might get sawdust. You can also get small leftover pieces of the wood. Understood? Now, please remember, our intention is not to produce sawdust or to produce small pieces of wood. Our intention is to make chairs or table. But along with the table, purchase, we are getting something free as a byproduct, which is not having that much value as main product is having. So that product is called what? Byproduct. Now, if you look and think, because I want to tell you, so there are three typical questions. Just we need to understand about the byproduct. Number one, should we process further or discard as scrap? Let me give you example here. You have some leftover pieces of the wood. So should we discard as it or should we process further? What does mean we process further? Maybe if I can work on these pieces, small pieces of wood, I can make some decoration pieces. Right or wrong? So I have to ask question first here. Should I discard as it or should I process further on these pieces of wood and convert into decoration pieces? So this is the first question. How would you know what you should do? So idea is very simple, guys. So here, what you will do, let me help you how you will decide should we process further or not. Actually, should we process further or not? It's a decision. Mainly this decision will be tested in CMA part 2. But you should know only at part 1 level calculations. So how you will decide should we process further or we should discard as scrap. So we will having a data like that. What will, for example, let's have a look with the help of example. So we will, for example, we have a sale price without process further. Let's assume it is what? $100. But if you will process further, you will get sale price after processing further how much? 120. First tell me what is incremental revenue if you will process further? $20, because without processing further you are getting 100 and after processing you will get 120. So it means increase in revenue will be what? $20. This is called incremental revenue. From this incremental revenue, we will deduct what? Incremental cost. Incremental cost meant to say processing cost, to process further. For example, we are provided with the cost of processing how much? $30. So we'll deduct that $30. Tell me incremental revenue was 20 and processing cost is 30. So if you will deduct, so your NRV will be what? Net realizable value will be minus 10. Tell me, is it benefit for you or loss for you? Loss for you. Tell me you should process further or not? You should not process further. You should discard as it. It means you have to simply calculate NRV by applying this formula. What is the formula? Incremental revenue minus what? Incremental cost or processing cost. If NRV is negative or 0, so then we should discard as scrap. But if NRV is positive, NRV will be positive in only one scenario where your incremental revenue will be greater than incremental cost. In that scenario, it will be positive. If NRV is positive, then we should process further. If it is negative or 0, please don't process further. So this is the first common question he will ask you to tell should we process further or not this byproduct. Understood? Then guys, we have a second question. It's written here, note. If NRV is positive, we should process further. If NRV is negative or 0, we should discard as scrap. And for NRV, remember the formula. There are different ways to do it. This is called incremental approach. Incremental revenue minus incremental cost. Understood? Then we have a question number 2. What if a byproduct is unsold at the end of year? For example, we have some sawdust or we have some leftover small pieces of the wood. Okay, so these are unsold at the end of the period. So what to do then? So there are again further 2 questions you should remember. If it is what? If it is unsold, so should we record as an inventory or we should not record as an inventory? This is the question here we need to answer. If it is unsold, guys, first of all, if byproduct, if amount is material, actually please remember, because this is unsold, this is, so first you need to estimate what will be the NRV of this product. NRV I told you, right? Sales value minus what? Selling cost. So this NRV you have to estimate first. I'm using word estimate. You have to estimate sales value minus incidental cost. What will be the NRV of the product? Understood? In exam, you don't need to estimate, it will be given. But practically, you should estimate. Okay, if it is unsold and amount is what? Amount is material, means a significant, big amount. It is not that much amount which you can ignore. It is big, you have to consider. If amount is material, please remember, as you are recording the inventory of other product, same way you will record the inventory of the byproduct also. It will be recorded in the balance sheet as a current asset. Understood? For example, as you are recording inventory of asphalt, fuel, diesel, kerosene, gasoline, same way you will debit what? Byproduct, but you will use which value? Estimated net realizable value. Okay, you will use it and you will record as a inventory. Understood? And will credit which account? Work in, because all these products we are getting from work in process account. Understood? So you don't need to confuse it. Just remember, if it is unsold, if it is, first remember what? Unsold by the end of period and amount is material, you have to record as a inventory at estimated NRV, net realizable value. But if amount is immaterial, what amount is? Immaterial means it's not significant. Very small, very, you can say minor amount it is there. So at that time, I'm writing one word here. Do nothing until it is sold. Like kept aside, keep it on side, wait until it is sold. And obviously when it will be sold, what you will do at that time, I'm going to answer in question number 3. So first question was, what should we process further or not? For that we need what? NRV. If NRV is positive, process further. Negative or 0, discard as scrap. Second question is what? What if byproduct is unsold? In question you have to look the word. If we told you amount is material, you would say it should be recorded as a inventory at estimated NRV. If it is immaterial, do nothing until the sale. Now scenario number 3. Okay, question number 3, if byproduct is sold. Guys, sold during the year, you sold it. So now there are 2 permissible treatments are there which you can do. Because you sold it, you will get a value now. You will get a value. So what you will do? There are 2 permissible treatments are there. Anyone you can follow. It depends which policy you will choose, which treatment you will choose, but both options are available. First option is what? What is the first option? First treatment is what? We will record separate line of revenue in the income statement. This is the first treatment. I'll show you what's the difference. Second treatment is what? This is preferable treatment also. So what we'll do? We will reduce the cost of goods sold in the, because the money you are going to receive through the sale of the byproduct, that money you can record as a separate line revenue also, or you can deduct the cost of goods sold also, or joint cost also. You can reduce it. Understood? So both will give you same profit, final profit, but it is just a presentation difference. For example, what if you are recording separate line item? So you will do this. For example, I have a revenue from the main product 300 and revenue from the byproduct 50. So total revenue will be 300. So you can see here I am recording as a separate line revenue with the main product, right? And for example, my cost of goods sold is how much? 150. So my profit will be how much? 200. Understood? Now second treatment is what? I want to reduce the cost of goods sold and the joint cost. Second treatment. Then how it will? I'll write a revenue from the main product, same value, 300. But this 50 I will use to reduce the cost of goods sold now. What was my previous cost of goods sold? 150. From there, I'll deduct $50, which I recovered to the sale of byproduct. 50 I will deduct. So my remaining cost of goods sold will be how much? 100, because 150 it was, 50 I recovered, 100 is remaining. Again, 300 minus 100, profit will be 200. Profit is not going to change, you can see here. It will be same here, but it's a presentation difference. What's difference? Presentation. So what treatment is preferable? Reduce the joint cost or cost of goods sold. Understood? Now here guys, we have to remember the note for your exam. Please also remember, this is really technical point, not technical important point. You should keep in your mind. Never allocate the common cost to the byproduct. Common cost will always be allocated to the main product. Don't allocate by mistake also to the byproduct. Please remember. Okay? Then we have a note related to the exam. Actually, this examiner, how they are doing. For example, I have a common cost. Please remember, I have a common cost. How much? You have to memorize only, please. Huh? I have a common cost of $1,000. For example, I sold what? Byproduct what? $200. Common cost before sale it was 1,000. If I treat this as a recovery of common cost, sale of byproduct, the recovery of common cost, my net common cost will be what? 800. Now the point is that I am confused. Should I allocate this common cost to the main product? Or should I allocate this common cost to the main product? This 800 means after deduction of byproduct. Please remember guys, they are using this tricks in the question. If he told you in the question that byproduct is not inventorized, if they will use this word, not inventorized, then we will allocate this common cost to the product. But if in the question he told you that the byproduct is what? The byproduct is inventorized, then so we will deduct sale of byproduct from common cost. The net common cost we will allocate. This is strict. If it is not inventorized, the gross value will be allocated, which is 1,000. If it is inventorized, then net value will be allocated. Just fix in your mind. Understood? Now guys, we are moving to the question. Questions will be some tricky also. I hope so our video is recording. Yes. So we have a question number 1. Okay, a company produces 3 main joint product and 1 byproduct. A byproduct relatively sales value is quite low compared with that main product. Obviously, it will happen because byproduct will always have less value than main product. The preferable accounting for the byproduct net realizable value is as. What is preferable? I told you. You should record separate line item, or you should deduct from the joint cost or cost of goods sold. Deduct from the cost of goods sold. Actually, answer is the C. What we have to do, we should deduct byproduct should be treated as a reduction in the common cost to be allocated to the 3 main products. But this is correct answer. Look at B. They are saying what we should do with the byproduct. A separate net realizable value on which to allocate some of the common cost is just a fake statement. Okay, and addition to the revenue, no. Preferable treatment is what? Reduction in the cost, not addition to the revenue. Because mostly these are smaller in value, you know. Understood? Then these what revenue in the period it is. So no, preferable treatment is what? Reduction in the common cost. So we'll do the calculation part now. Practical question you can do, guys. So I would request you, would you please read this question first carefully, and then I will solve it. Read it, guys. So guys, we have to calculate what? We have to calculate, first remember here, assuming Atlas Food is the name of company, does not inventory more feet. They don't record as inventory. If you do not record the inventory, gross value of common stock, you will allocate. Because common cost in the question is how much? 93,000 is given here. And in the byproduct, you have how many units in the byproduct? Byproduct is your more feed is given here, right? Okay, let me read the question, guys. So they're saying assuming Atlas Food does not inventorize more feed, it means gross cost we will allocate. So we have to calculate joint cost to be allocated to debtors using the net realizable value method. So there are three products. So here we go. Atlas Food produces following three supplemental food products simultaneously through a refining process costing how much? This is common cost, 93,000. The joint product alpha and betas have a final selling price of 4 per pound and 10 per pound respectively. 4 is for actually alpha and 10 is for betas. After additional processing cost, this is incidental cost. Incidental cost is how much? $2 per pound of each product. It means the same is for betas, same is for alpha. Then what? Then they're telling you more feed a byproduct. There is a third product along with alpha and betas, that is more feed, is sold at splitter point at how much? 3 per pound. This is actually the byproduct. So how many pounds for byproduct we have? It's given next. Alpha, how many pounds we have? 10,000 pounds. And next there is the calories in each pound. Betas we have 5,000 pounds. And more feed we have 1,000. So here, more feed, how many pounds? 1,000. And you sold it for how much? 3 per pound. So it will be how much? So remaining will be what? 90,000 is a common cost. Now I have a question. Should we allocate 93 or 90? Because common cost was 93. Recovery through the sale of byproduct is 3,000. Net common cost is what? 90. Should we allocate 93 or 90? 93 because 4 bit is not inventorized. 93 we will allocate. So we have to allocate 93,000. How you will allocate? So this is how you will do it now, guys. Remember the prices data, it is 4. 10 is sale price. Processing cost is 2 pounds. So, and here we have a pound. I'm going to solve here. NRV method you have to apply. First of all, you will write the name of product. Help me. You have a product alpha and betas. A and B. Don't write product byproduct. Don't write, please. Don't allocate common cost to the byproduct. Just write main product, alpha and betas. Then you will write it here quantity. Quantity means a pound. Alpha is having how many pounds? 10,000 P. And betas are having 5,000 P's pound. It's given here. Then because NRV method I have to apply. NRV, I will multiply with the sale price. Sale price was for alpha, it was 4, I guess, right? 4. And for beta, it is 10. So we'll multiply with 4 and multiply by 10. This will give you total sale value. This is sale price, okay? So you got sale value. So 10,000 times 4, 40,000, 5,000 times 10, 50,000. From sale value, we have to deduct which cost? Incidental cost. And incidental cost, he told you $2 per pound for each product. Tell me how many pounds for A? 10. For A, it will be 10,000 times 2, it will be 20,000 incidental cost. I'll deduct 20,000. For beta, pounds are how much? 5,000 into 2, it will be 10,000. I'll deduct here 10,000. Understood? Then you will get what? You will get what? NRV. Don't say it is something different. NRV. So sale value 40,000 minus 20,000, it will be 20,000. Sale value 50,000 minus 10,000, it will be 40,000. Understood? So what is total NRV? Make the total. Now tell me for which product you want to calculate. Alpha or beta? Betas. So what I'll do? I'm just doing for betas. If you are doing for alpha, you can also do. For alpha, this first is alpha. I'll take this value divided by total value, which is 60,000 multiplied by common cost, which is 93,000. Understanding? Okay, this will give you for alpha. For beta, 40,000, which is NRV divided by total 60 multiplied by 93. Because you have to solve for beta, so tell me what is beta answers. Tell me here, 40 divided by 60 times 93. How much, guys? 62,000. Okay, for alpha what it will be? For alpha it will be 31,000. Right? But we have to calculate for what? Betas, it means the common cost which should be allocated to beta, it is 62,000. If he's asking for alpha, then answer is 31,000. Understood? Clear? Then we have here one more question. So here you have to calculate what? Same question data is the same. Assuming Atlas Food what? Inventorized more feet. Now you are inventorized. Okay? It means if your common cost was 93, say byproduct it was 1000 times 3, it will be 3000, so remaining 90,000. If it is inventorized, this value will be allocated. If Atlas Food inventorized the more feet, a byproduct, that incurs no additional processing cost for alpha and betas, the joint cost to be allocated to alpha using what? Gross market value method. What is gross market value method? Sale value at split off point. At split off, it means you will not incur further processing cost now. That's why he told you what? If it incurs no additional processing cost. Where is the additional processing cost? Here is additional processing cost. Ignore this 2 also now. You have to apply which method? Gross market value. It means sale value at split off. So how you will do it now, guys? First you will write it here, product, which is alpha and betas. Right there, quantity, alpha quantity is 10,000 pound, 5,000 pound. I am allocating based on pounds. Huh? So you will multiply with what? With the sale price. It was 410. It will give you sale value 40,000, and it will give you 50,000. Because you have to use sale value method now. Don't calculate NRV. That's it. Total sale value will be how much? 90,000. If I want to allocate to alpha, so how I will take this 40 divided by 90 multiplied by common cost is also 90,000. Understood? For beta is what? 50,000 divided by total, which is 90 multiplied by common cost is also 90,000. So for which you have to calculate, guys? Alpha. Okay, what will be the answer? Tell me. Same. 40 will be allocated to alpha, 50 will be allocated to beta. Understood? I hope so you can do it right, guys. So this 40,000 is the answer for him. See, small words will make difference. So I'm going to do technical question with you. Hard question, once I will solve, you will say it's easy, there is no problem. But once you will do at home, you will say, what the hell is it? Okay, so here we go. Without wasting time, let me show you technical question, because most of the time students, they ask this question from me also. How it is solved. So I have to reduce bit size of the question. Please, guys, I would suggest you to read this data first. Please go through this data properly. Okay. First of all, they're telling you we have where P manufacturing uses a joint production process that produces how many products? 3. At the split off point, joint production cost during April was, this is common cost. Product information for April was as follow. We have 3 products, R, S, and T. So here we have a unit produced, here we have a unit. Don't use unit sold ever. Always use unit produced. Then he told you sale prices at split off point and at after processing further. And here we have a cost to process further, obviously. Here we have a sale prices. Then we have a further processing cost for each product, right? Then he told you what? Assuming that product T is treated as a, this is byproduct. T. I'm writing T is byproduct. Then what? That company accounts for byproduct and add the net realizable value as a reduction of. So it means byproduct. We have to check, are we going to process further or not? And there they told you whatever money you will get through the byproduct, it will be treated as reduction in joint cost. He told you, right? Okay. Assume that product S and T must be processed. It means R we are not going to process further. S and T we are going to process further. Understood? As we are going to process further. Now tell me guys, if we are going to process further S, which is the product S? Here, and T is here. S and T is going to be processed further before they can be sold. Now they're telling you what is the P total cost of product. Total cost of product R. What is P's total cost of product R in April? Is joint cost allocated based on net realizable value method. Question is technical. So first what you will do guys, you have to deal with the product R first. Just calculate some values. Tell me product R is going to process further or not? No. So first calculate, because you need what? You need to calculate what? Net realizable value. Okay. I'm writing here now. Please remember. This point you should remember. R, which is not going to be processed further. R will be sold at which point? Split off. So what are R units produced? And what is the selling price of R at split up point? This 100 will be relevant. Don't take this 150. And don't take this cost also, because this is further processing cost. We are not going to process R. So our relevant information sale price is 100. It means R value is 250,000. We got R value first. This is our sale value, right? Which value? Sale value, because we are not going to process further. Understood? Then do for the S. S you are going to process further. Right or wrong? For the product S, how many units are there? 5,000. Multiply which value I should use? I should use 115 because it is going to process further. I multiply with 115. How much you will get? How much you will get? Can you tell me, guys? 575,000. This is sale value after processing further, right? But you will incur also which cost? Further processing cost. We are dealing with S, right? So I'll deduct here further processing cost because I need NRV. This is sale value, guys. For NRV, I need to deduct what? Incidental cost also. Incidental cost is how much? 150,000. So this is going to be my NRV. I'm just doing another way. Understood? So what is NRV value? So 575 minus 150. It will be 425,000. I got NRV. For product R, we don't need NRV because it is not going to be processed further. But product S, sale value, because it is going to process further, I'll use this sale value after processing. So my total sale value how much? 575. From there I'll deduct incidental cost to get NRV. Same you will deal with what? Product T. Do for T is also going to be processed further. And don't forget, T is your byproduct, but we need NRV for that. Understood? So T, how many units we have? 7,500. What is T? Processing cost. By T, it will give you how much sale value? 225,000. From the deduct incidental cost also. Incidental cost is how much? 100,000. So remaining will be how much? 125,000 as NRV. Sorry guys, I hope so you will understand. Now calculate the common cost. What was common cost? 720,000. And I told you, they are telling you the T is your byproduct. And if you will sell T, this is your common cost. 720,000 given here in the question. He told you T will be treated as a reduction in the common cost. What is T value? 125,000. This is the final NRV of T, right? You will deduct as a reduction. Okay, so this will give you remaining common cost. This is byproduct you are reducing. What is the remaining common cost? 695 or 595,000. This is the remaining cost. This you have to allocate. You have to allocate to which product? To R. Understanding or not? It's technical, I know. You have to allocate to R. Based on what? NRV method. Where is R NRV? Now we'll write the product name. T is the byproduct is sold and it is reduced. It is treated as reduction in the common cost. Now you will use the word here. Write the word product. We have two products. Which one? S and R. S and R. I'm writing R and S. I'm writing directly NRVs. For R value, you have already calculated because it's not going to process, but it is how much? 250,000. But for S, it is how much? 4 for 25,000 we calculated here. Total is going to be how much? 675,000. And now I want to allocate to the R, right? I'll take R and NRV value divided by 675, which is total NRV, multiplied by common cost, which is 595,000 we calculated here common cost, right? Right or wrong? Right or wrong? This we will multiply, you will get the answer. Yeah, 220,370. Okay. Our total unit produced, they are saying it. I hope so we have done correctly, right?
Yeah, you just zero.
Okay. Zero, ignore mathematical errors there, guys. Just understand the process is correct or not. Okay. So this is technical question. You can go through, rewatch again. This video will be provided to the management. Understood, guys? Thank you so much. If you have a question, you can ask me.